I think we can start. Good morning once again. Let me see from the chat whether you can hear me. Just say hi if you can hear. Okay, thank you. So today I want us to go through NSE share trading. We usually do these trainings every Wednesday. Every Friday is international stocks, ETFs, and other international products that are offered by AIB and also offered by other brokers outside. Because for us, we would want you to expand your investment. Today, I want us to dwell much on NSE one share trading that was introduced recently. We see how it works, what are the new effects in the market, and also on your portfolio and client statement. And you also see how you can use that to your advantage. So today is a practical NSE one share trading. And one share trading, for those who may not be aware what you're discussing, is the NSE allowed you to buy any share, any number of shares without a limit. Initially, we used to have normal, where you'd buy in multiples of 100, and ODD, where you'd buy one share to 99. NSE opened that such that now you can buy from one share upward without even breaking your order into two, if it is a makeup of normal and ODD. So what is one share trading? As I explained in the beginning, initially we used to buy shares in multiples of 100. If you need less than 100, or if you are buying a makeup of 100 and any other figure between 1 and 99, you used to break the order into two. You'd buy 100 shares in the normal, then the balance, if it is less than 100, you buy at the ODD. So NSE, they upgraded that rule, where now you can buy from one share upward without worrying about the makeup of the trade. And I believe you have seen the effects of that in the markets. You have seen prices moving and also tight spreads, increasing liquidity. We'll come to that, but it also has its own effects, which you as a client, you may not need to worry a lot, but it has some other effects. So what changed is from buying 100 shares in multiples of 100 to buying even one share, without even worrying whether there is supply or demand. Remember, initially, for one share, you do at the ODD, and you needed a separate detailed pricing and also market depth, which was not available to see whether there is supply or demand. But now they have been combined into one market depth. You will see both on the portal and also on the app how it works. So before, you had to buy in multiples of 100 of any company, and odd lots was not guaranteed. If you are to buy 50 shares initially or one share, as I said, we didn't provide market depth to the client. So you didn't see whether there's demand or supply for your shares. Right now, you can buy even one share without splitting the order. The prices, the order quantity, the splits you see includes one share all the way upward. This makes it easier to start investing with less money. Initially, if you are to buy like counters which have given good dividend, like Stanchart, Williamson Tea, Captura, you had to put a lot of money to buy that 100 shares. Right now, you can buy one share of it and earn that dividend. But it will come when we see the pros and cons. You realize buying one share won't help you a lot. You need to keep on investing, buying more shares. So an example, if Safaricom costs 15 shillings, just for argument's sake, in the old rule, then you'd buy 100 times 15. So would pay around 1,500 plus the levies. Then if you are to buy now Safaricom, let's say 50, it was not guaranteed you'd get that execution. It's only in multiples of 100, because that you can see on the app and the portal order market tab. Now with a new rule, you can buy one share, which you multiply by 15. So you only pay around 15 plus the charges, brokerage, and levies. I will come to that with a breakdown of all the charges that you pay when you buy shares at NSE. So why does this matter? Raw starting capital. So this allows most people to buy shares. Also, it also allows you to test water before committing big money. Let's say you want to buy Stanchart and you're not sure. Let's say tomorrow is the day they're announcing their results and you don't know what will happen. You can just put a few coins today, see if the market will go up. Then if it goes down, then you can add more money and buy more shares. Or you wait the following day, early in the morning, you just put, let's say, around 10 shares. You see how the market moves. If it moves down, then you can put more money in and buy more shares. So it allows you to check the market before you commit the amount that you have decided to invest. Then it also allows for more buyers and sellers, making market have more activity. And with more activity, that means liquidity and also price movement. Initially, you'd notice NSE prices would stagnate a lot. It was not like international markets. International markets, price within a second, they move a lot. We hope now when the app comes, because once that is opened, hopefully today, tomorrow, or Friday, from next week, you see a lot of price fluctuation, because now all the people who have been using the app will be able now to trade one share. So a good example is a student who previously couldn't manage to buy shares. Right now, they only need to factor in, maybe they say, I put a 500 to buy shares every semester. Or if it is a kid, you're helping to invest, you've opened a junior account, you can help them now start investing the small amount you give them for pocket money. So the impact on the market, as I said, it has its own advantages. One of them is high liquidity. It will allow more trading and making it easier for you to buy and sell. Liquidity means if you have a sale order, you already have a buyer who is ready to buy shares. If you have a buyer, you already have available supply for you to buy from. Initially, you'd notice some shares, the price difference between the top bid and top ask was wide. It's called spread. And widespread means low liquidity, because you're not able to sell or buy unless you're willing to be hit with the price difference. Right now, you notice the prices have even narrowed down. That spread, I will show you in the market depth, that's the spread have narrowed down, allowing for liquidity at NSE. Then possible higher volatility. Price may change faster with more trades. Like what happened, I think the last 2 days, we have seen some counters moving with high prices. And I think for those people who bought some time back and you have made enough profits, you may rethink whether you want to sell. But if it is a share that is giving you dividend, then don't sell. Actually add more. But again, with price for volatility, it means prices can go either way, either go up or down. But again, there are other factors that affect prices. Then we'll have more retail investors. That is a minute. So more retail investors. So ordinary people now can participate more. So initially, as I said, when you are starting, it would require a bit of huge capital for you to buy some shares. But now with one share, it means everybody can access the market. Yeah, confirm on the chat. I'm still audible. I can see the chat is a bit quiet. Just confirm. Okay, let's proceed. Sorry for that inconvenience. So an example, if a counter now moves from, let's say, 10 shillings to 10.50 in a day, that would mean around 5% jump. So small investors may cause those swings compared to the previous trading. So a real live trade example and how it works in practice. So for small starter trade, maybe you can decide to buy 5 shares, let's say of KCB at say a Y price. So the total cost would be now the number of shares you are buying times the price. Then you factor the cost. Then you can also decide to test a new company. Let's say it is a company that is listing and IPO have closed and they have listed in a stock market. They are selling their shares and you don't know which way the price moves. You can say, let me just buy 1 share at the price that it will list before you decide now to put more money in. Then it also helps you to build your portfolio slowly. So you can be buying, let's say, if it is Safaricom and you don't have a lot of money, you can decide, let me every day just buy 2 shares or every month 2 shares. And you can build a bigger portfolio because those shares add to your total. So this opens door for any budget investor. So you don't need, like initially you would ask, how much do I need to invest? Right now you only need to multiply 1 share times the price, then you factor the cost. It also encourages saving and investing culture. Then it's also good for running the market without big risks. So then how does this affect your statements? I think we'll come to that. Let me first go to the portal. We see how it works in practice. So I'm logged into portal and I hope you can see as I pick question, just confirm you can see my account. What is the minimum dividend payable via M-Pesa? I think it is tied to the minimum amount you can receive on M-Pesa. I think, did they lower from 50, Bob? It goes with the minimum that M-Pesa system allows. I think it's around 50. And I hope they will review their minimum amount lower than that. So let's go to the portal, refer a none. This is where you refer a friend to open an account using your referral code. Then the commission we charge for the first 1 year from the time account was opened, you get 50%. Like mine, you can see that 74.95. I think it's for the last 2 days. So you refer a friend, you open account using your referral code. Always use a copy link. You share the link. Once they start trading, the commission that we charge, we share with you 50% for 1 year. So for the trade they do for 1 year since they opened account, you get 50% and it is credited back to your account. The figure you see here is unpaid. As I said in the previous tutorials, the way it works, we accumulate every day. End of the month, we calculate the total. So the total you see at the end of the month will be paid the following working day. That is the next month, first working day. It is posted in your account. And the way it is posted, if we go to reports, then statements, we go to the first of this month, you can see that there is already some amount posted. So the one that is there, it will keep on accumulating until next month. So this 74 will keep on accumulating. So next month now I'll be posted with a new entry. So let's go to home. We want to see the 1 share rule, whether it is there on the portal. On the left side where you can see my watch list, that gives you the list of shares, last price, last quantity. This is the last orders that executed. And if you look at the screen that is split into two, it has the red on one side and right blue, where the, don't know whether you can see my cursor. Let me try and move it. The screen I'm moving. If you look at it, there's somewhere it has RTT. That is last traded time. So that RTT goes with the last price and last quantity. So this last price and the last quantity, there was a buy and sell order that executed at 12:28 for the share that I've selected. So if you select each share, you see the time keeps on changing. So it tells you when that counter last traded. If it is blank, that share may be suspended like cables. If it is blank, it's suspended or there is no supply or demand. So let's go back to ABSA. So we have bid quantity, bid price. I'm still on watch list. Bid quantity, bid price, those are the top people in the side of the buy side. The people who are willing to buy at the top price of, if you take ABSA, 1975, 350 shares. If you go to market depth, it's the same thing you can see, but it has additional details of split. Then on the left side, you have offer quantity and offer price. Those are the people who are willing to sell. The top one on the supply side, that is the lowest price the sellers are willing to sell. So on the bid price, it is the highest price the buyers are willing to pay. Why do you need this? It tells you whether, as I said, whether that share is liquid, whether you're able to buy and sell. Narrow spread, we have said, high liquidity. Widespread, again, low liquidity. So if you check on now that screen I was moving, this one, it's called market depth. It has two splits. One side is bid and the other one is offer. Bid are the people who are buying, offer are the people who are selling. And you have different prices, which if you pick the bid side, the one with the right bluish, we have from 1975 all the way to 1955. But if you go to the app, you see additional prices. So those are orders at which the people who are willing to buy ABSA, those are the prices the people who are willing to buy ABSA have put in their orders. It is subject to 10% rule. So the lowest you can go is the opening price times 10%. So it's around 2 shilling. So if you remove from 20, you can go the way up to 18. But that does not guarantee you get these executions, because you must be having a willing seller at those prices. That's why now the sale price comes in. The sellers, they're also willing to put their own price. They have from the opening price 20 all the way up 10%, which is around 22. So they can put from 1970 all the way to 22. But again, the orders will be queued because there is no willing buyer at those prices. So execution will only happen if there is a matching counter trade. If you are buying, there is a seller at that price. If you are selling, there is a buyer on that price. Now on the portal, you have splits. Splits means the number of orders that make up the bid quantity at that price. Like if you are to take 1965, the bid quantity is 118 with only 2 splits. It means this is a makeup of 2 orders. It could be 100 and another person buying 18. I think it has gone up to 818 with another order, and you have seen now they have gone to number 3. It means those are 3 orders making 818. Initially, I think it was around 118. So there is an order that have come in for 700. So this could be a makeup of 700, 100, and another one for 18 at 1965. Now, if you go on the supply side, 1975, we have offer quantity 245, 1 split. It means this is just a single order. Somebody is selling 245 shares. Why is this important? The split tells you the number of orders that have been put in. If let's say on the buy side 818, you come and find there are 10 orders, you need to be very careful. Because if you are selling your shares at 1965, at that price and you want to sell the exact 18 shares, you are selling to around 10 people. It means you have 10 postings in your statement. You also have 10 contract notes which may have effects. We will see when we come to that. So that's why on the portal it's very important before you trade. For those who have portal, you always check the split before you even place the order. The split tells you the number of orders. So if you're buying and you want to execute your trade immediately, first check on the supply side, offer side, the top price 1970. How many splits are there? Don't even first look at the quantity, the splits. If there are many, you may need to think a second time. Do I want to get all those executions on my statement? If you're not willing, then wait until people pick those shares. But remember, the market may not wait. It will move. So it is a decision you make. So you check the price first. If you are willing to take that price, check the splits. If you are ready, now check the quantity. You can place order based on that quantity. It will clear immediately. So if you are buyer, you take 1970, there is already supply available, it will execute. If you are selling, you come to the bid side. You check 1965, that is the highest price the buyers are willing to pay. How many splits? 3. So these 818 are 3 orders. Do you want to get those 3 splits? If you are willing, then you can sell at that price. It will execute immediately because there is a demand available. However, if you put any other price as a buyer on the bid side, you will have to wait until price comes down. Huh? Or the same as the seller, if you put any other price on the offer side, you have to wait for prices to go up. It's not guaranteed. As you can see, there are so many orders that are coming in. Sorry for that. Now, we always have another order called market order. This is why you also need to be very careful when you're submitting market order. Market order says, go to the market and pick me everything that is in the market as long as you can fill my quantity. As long as you can fill my quantity, pick everything. So let's say you put an order to buy APSA, let's say 1 million shares. I like using that example. And you have put market order. It will come on the supply side. You are buying 1 million shares of APSA at market. It will come on the supply side because you have told the system, pick me everything that is in the market as long as you can fill my 1 million. So it will first come to 220, pick 1970, go to the next queue, 1980, pick the 12,000, go to the next queue until your order is either fully filled or the balance is cancelled. So if like now, if you look at the total orders on the supply side, the balance is cancelled because you have not told the system to convert that into a price, the balance. And that's where now market to limit comes in. It works different. So for market order, as long as your quantity can be filled, it will keep on executing the trades on different prices until your full order is filled. Now again, we come to splits. How many transactions will you get in your statement? So you need also to be very careful. So when you're placing market order, first check the quantity and the splits. If you're putting limit, remember limit executes at the exact price you have put. Also check the splits on that price. For the market to limit, you are saying, go to the market, pick me the top price. If you are buying, pick me fill my order. If it's not able to fill the balance, don't cancel. Convert it now back to the bid as the top price. Now the top price will be 1970 for the balance of your order, and it will be a single split because it is your order only. So that's how the new market rule works. And hopefully we'll be very careful when placing the orders. you need to be very careful with the splits. So let's go to one counter. I'm not sure which one to buy. Let me come to Q&A. As I pick Q&A, maybe you, the first person to tell me which share to buy, I would buy. Right now, you can buy one share of any counter. And I'm doing it on the portal because I've told you on the portal, one share you can buy, not on the app. On the app, I'll just go through the screen quicker. Then next week, because now it will be live, we'll come and see. Actually, you see price movement. And let me just check whether, do we have graphs? Let me check whether we have graphs, because that's something you may need now going forward. It may not be there for now. Let me check. And if you scroll this screen, the market watch, my watch list, you can see additional details. I'm just checking whether there is an option for graph. I think it should be at the. If there is a screen you find you can't see here, first you try and scroll down. Scroll down the whole screen and see if they are hidden down. If you can't find it, you just click on the plus sign on the bottom right. Then you can check along this whether there is a, we have a chart here. I can add. So you click on it, it ticks with that tick, then you click save, then okay. So if you scroll down, you find there should be a chart. Actually, it is here, just next to market depth, the empty one. I can add, let me see if I click, if it is linked. Yes, it is there. You need this graph. Now we go to how Forex and CFDs work. If you're not used to those graphs, you may need these graphs. Now, starting from next week, because I know the market will be volatile. That is if you're a day trader. If you're not a day trader, you don't need the graph. Maybe you only need to see the last 6 months, see how the share have been performing to decide whether you get in. If you want to see or you won't show beyond 2011. You can go 1 month, but now with one share trading coming to the app, I can tell you that time market might crash. Remember right now, I think most of our trades, 90% of our trades go through the app, not the portal. You can tell. If this is what's happening with the portal, what happens when we bring in the app for one share? It might even crash the market. So if you click on one day, you may need to see like now within the day, if you're a day trader, when market opened, you'd have bought at 20. Then after a few minutes, between, if you bought it around even 10, that is, if you sold, if you have shares, you sell at 20, you could have bought back at 1970. So you make a 0.3 cents. That is if you already had shares. However, if you're buying and you bought at 20, you're losing. Wait for the market to go up. So I hope that is clear. So you need the graph. If you click on the plus sign and it doesn't bring this pop-up, you have blocked your pop-ups. You only need to go to the 3 dots just next to your username, below the your profile, just below the cross button. You click on the 3 buttons, you go to settings. The next screen here, you just type pop apps. Then you go to site settings. You scroll down to where there is pop-up. Then you check other, where there is just where I've highlighted, not allowed to set pop-ups. If our site, this online trading.nsu.co.uk is listed here, you just remove. So you click on the 3 dots, you click remove. Alternatively, you can click where allowed to set pop-up. You just click add, then you copy this link the way it is. Sorry, let me return that. You copy this link, then you paste it here. Then you click add. it will be added. As you can see, it is added here. But me, I don't need to add because I've not blocked. So if you find this link is within not allowed to set pop-up, just click on the three dots, you click remove. Then you go to your portal and refresh. Once you refresh, the first screen that comes up is the referral. I'm just refreshing. This should be the first screen. Even when you log in and you don't get refer and earn screen, you have blocked pop-ups. That's why you are not able to add widgets. There are several widgets you can add. Here they are. You can also add sector statistics. Once we come to some terminologies that are used by our research, some of these screens you may need them. So let's go on and see a few questions that come to you can does car and general shares there on the dashboard. What is the current price? Let me share again. Car and general is CNG. Where is it? CGEN. It is there. If you can't find it on your watch list, just click plus script on my watch list. You click plus script. It gives you this pop-up. You leave the rest as they are. Under security, you just type car and general, the name, tick it, make sure it is ticked, then you click add. It will be added. That's how you add any stock that is missing. If you want to remove, you just click on the delete icons that are shown there. So the next question, what happens? I think you can see the current price. That's why I have moved to the, let me just click on it. Its current price is, we are buying, it's 35. If you are selling, it's 27.2. Why am I saying that? As a buyer, your current price is the selling price. As a seller, your current price is the buying price, because that is the price you can sell to. If you are buying, that's the price you can buy from. So the current price, it depends. Are you buying? If you're buying, it's 35. If you're selling, 27. And you can see that widespread. Notice even the splits. It's only single orders. It tells you this is not a volatile counter. There could be possible reasons. What happens if the bid price and offer price never match in a particular day? They can never fail to match because there are people who are willing to sell, to buy at the prevailing selling price, and there are those who are willing to sell the prevailing buying price. There is also market orders. It's unlikely you find there is no execution, and if there is no execution, then there is a problem without share. Either there is material announcement where people are not willing to buy or sell, or maybe the market have been halted. In most cases, you might find maybe one block is, let's say on the offer side, they have taken the lowest minimum allowed price for the buy. Remember the 10% rule. So they have blocked new orders to come in at buyer's preferred price. So they are forced to sell at the current selling price. And maybe people are not willing, but it's highly unlikely. It's in NSE, you will not find that happening. Maybe for now, especially with the one share rule, maybe we'll see if there is any share. If you have an example, maybe you can put on the chat. We just check, because that tells you there is a problem without share. But if there is no match, then it means, if that happens, then it means there is no trading happening for that share. suspended. And if it is suspended, the prices are zeroed. They are put, the counter is put on hold. That would be the only reason. But remember, market orders are coming in. Why are my limits so essential to consider? I'm not quite sure which limits. Maybe you can clarify which limits, but if it is the price limits, they are very important, as we'll see in the next slides. If you are buying and you pay a high price, remember their cost. It means you are paying higher price, yet the market may have gone down. So it's very important you also consider price. If it is the spreads, why they are very important, let me go to Safaricom, because I know now everybody is on Safaricom. Okay, this one doesn't have a lot. Let me see a share that we can use as example. But again, it's because the app, none of the broker app is allowing one share trading, apart from those which have integrated directly, Dosika and My Stocks, and those are third-party systems. For the broker specific, I don't think there is any which have implemented one share. I'm just checking the one which have huge spreads, just to explain why they are important. Let's see KPOC. I'm looking at the top prices. This one, Kenyan, is a good one. If you look at the buy side, 734, we have 48,021 for the split of 12. So that means it's 12 orders that make up that bid quantity. If you are to buy, if you are to sell your shares, let's say you have 50,000 of Kenyan and you want to sell at 734, you will have 12 executions. 12 executions. So in your statement, you have 12 entries. We'll see via example whether that affects the costs. Vis-a-vis buying, selling one lot of 50,000 or 48,721, selling to just one person. We'll see whether it has effect on the cost. But again, remember, broker sends you statement and contract notes. So how many emails will you receive? On CDSC side, it doesn't affect anything because shares are just aggregated into one. On the broker side, that's where there is a problem. And we can't split. Remember, we have to post individual transaction as they have executed at NSE. So unless NSE gives us a compounded figure for your account, we cannot split. We are only allowed to put what they have given us. So you can see, like now for Kenyan, for a seller, you get 12 transactions. What if you are selling even other counters? You can see now the statement, the way it will look like. So that could be the downside of those splits. I hope that's what you meant. BAT, Safaricom, DTK, EABL. Let me pick BAT. I think Christine have explained on the split. If it is not clear, I'm coming to that. Actually, that ties to the next question. I'll come to that. Let's first execute a trade we see on the platform. Let's execute BAT. So we go to BAT. I'm just buying one share. Hey, 500. Okay. Let me assume I'll be able to pay for this. So I'm buying. I want to just buy one share. So what price am I supposed to put? Let me see on the chart quickly. It is there. It's the one you can see on the market depth. For me to get those shares, just one share of BAT immediately, what price should I put? I just want to see for 40. 427. I'm buying, and I want the shares immediately. Let me see another one. 435. Yes, for those who have put 435, you are correct. Now for 440, I'm buying. The system will not allow me to execute at 440 because there is a lower price than 440. So it will execute, even if I type 440, to execute at 435 because there is a lower price than the one I'm buying it. That's how the market works. As a buyer, you get the lowest price first, and you execute with the first person who put in the order. If I'm selling, it will be 434.75 because that is my current price as a seller. So as a buyer, my current price, as I said, is 435. I'll get the shares immediately. Any other price, I'll be queued. But if I put a higher price than my current price, let's say I'd put now 440 and I'm buying 2,000 shares, I'll clear both prices, 435 and 440. That is the risky nature of putting a price higher than the current price. If I put 450 and I put 50,000 shares to buy, I'll clear from 435 because that is the top, then 440, then 449, then 450. So that is the risky nature of putting price higher than the current price. So it's only normal. So I won't explain this. This you can put in a number of shares. Security is the share that you want to buy. Let me click again. Is the share you want to buy, and always make sure the name is correct. Is the share that you want to buy. Then quantity, I only need one share. There is a remit, market, and market to remit. I explained this. Remit is where I'm putting a price for that 5. And you can see my current price is already highlighted there. That's why I said, as a buyer, my current price is the seller's top lowest price for 35. For market, it won't allow me to put price because it will go and execute immediately, and it will execute at 435 because that is the current price. However, as I'm submitting, the other people who are submitting by order, if they come and clear the 1497 quantity, and I'm submitting the market order, it will execute now the next one for 440. So that is the risky nature of the market orders. Remember, there are people who are also submitting orders. If they clear this 1497 at 435, my order will execute at 440. But for a limit, I would execute at 435 because that is the current price. Market to limit says just go and pick one share at the current price. If it's not able to fill, let's say I'd put 2,000, it will pick 1497. The balance now will be queued at 435. 434.75 down. Now 435 will be the new bid price with a bid quantity of 1 and split of 1 because it's only a single order, my order. So that is market to limit. And I've done limit before, I've done market order. Today, let's do market to limit. Then validity, because it is market to limit, I can't change. If it is a limit, I'm allowed to change. Day means it is just valid for today. GTD is good till date, and that date you put here, the number of days you want, up to 1 week. So my order will be valid. Then that's where these prices you see down here as buyers, like 425, they have put GTD. They could maybe expect the prices to go down, so they are giving it a whole week. So the order will keep on being refreshed. But the price here, you put 425 or 428, 429, 434, 434.75 as a buyer. On the seller side, it's the same. Good till date, then you put the number of days you want your order to be in the market. Either it is cancelled by yourself, by the system, maybe because of 10% rule, or expires now on that day you have put. IOC is immediate or cancel. When I submit, go and execute immediately. If it doesn't execute, cancel my order. However, this order does not play much in NSE. Because initially the thought was when you submit, it also checks the quantity you are submitting and matches the exact quantity. That's not the way it works. Huh? It says just go to the market. If that price is available, execute immediately. If you're not able to execute, just cancel that order. Go to the counter here, the new ETF. I'll come to BAT, don't worry. You see there is no supply. I can say go and buy the share that is SMWF at 800 or 801, because maybe I want a higher price. I'm saying go and execute. If you're not able to buy, cancel. Already there is no supply, so it won't buy. So the next thing, you cancel that order. So that's the use of IOC. Execute immediately or cancel my order. That may happen if you want to buy shares immediately. Maybe you want to go back to office. You submit your order and you want it to execute immediately. If it doesn't execute, just cancel. Then you continue working. So that's the use of IOC. Let's come to the next one. Is FOK, fear or kill. Fear or kill. It says, go to the market. I'm submitting my buy order at 440 to buy, let's say, 100 shares. There is already 350. So you either fill my 100 shares. If you're not able, don't even execute, cancel the order. So it will fill. In that case, it will fill. However, if I was buying, let's say, 500 shares at 440, there's already 350. I have put FOK. What happens? It's not able to fill the quantity. So it will go check the total quantity that is available. Can it fill my order? If it is not able, cancel. Don't even execute a small lot. So that is the use of fill or kill. Then we have trading mode, delivery intraday. Delivery is where when you buy today, it's tied to T+3. You give 3 working days for CDSC to wait for any adjustment. If there is no adjustment on the third day, 5 p.m., CDSC, they release those shares, you can sell the following day. And we pay now the person who had sold to you. Now, as a seller, in EIB, we give you credit immediately, and you can use it to buy shares same day. Immediately you sell, you can buy back shares as long as the credit have reflected. It's not like the buy side where you have to wait for the fourth day to sell. So that is the difference. The difference is on buy side between delivery and intraday. Delivery, as I have said, you buy today, you can only sell on the fourth day. But settlement doesn't change if you are selling, because money will be paid on the fourth day. Only that if you are buying, you can buy back the same day with the credit. In intraday is where you can do multiple trades within the day. You can buy today and sell today. It's not tied to T+3. You can sell today and buy back. Whatever you have bought back for BAT, you can sell back. Whatever you have sold back, you can buy back. So you can play around with BAT the same day. So intraday and delivery, the difference is on the buy side. Delivery, you can only sell on T+3. That is on the now on the fourth day. Intraday, you can do multiple transactions the same day, the same counter. However, the intraday, we check the total trades you have done on buy and also on the sell side. We check the commission. Which side have a higher commission? That is called first leg. The side that have a lower commission is called the second leg. So on the second leg, we are not charging you commission and brokerage on intraday, not on delivery. Delivery, you pay everything. What if you buy on intraday and you don't sell? Then you don't qualify for the rebate because we are checking both sides. It must have a counter trade. So let's execute. We have said I'm executing just one share, and you can see lot size is 1. I'm executing markets to limit. I leave everything. Let me that difference is not a lot I can sell today. So let me buy. So you get a breakdown showing you the total cost. There is the brokerage, statutory levies, NSE, CDSC, and CMA levy. The net consideration is what me as a buyer I pay. As a seller, it is the amount you receive. So it is lower because you are subtracting. For buy side, we are adding the cost. Then you confirm the trade. It's already successfully priced. And you got your notifications here. You can see there is already a notification. Unfortunately, it is in the other, is it a descending order? So already there is a trade confirmation and order submission. So order was submitted, executed. Let's go down to order status. It's here. You can see it's already filled. There is no balance. It's fully traded. So that is the work of market to limit. It executes at the current price. And as you can see down here, there is execution for BAT. And it gives you even the trade price. As I said, it picks the current available, current price for buy side. So it will be the price on the top price on the supply side, because that is the current price for a buyer. And you can see all the details. If I go to portfolio valuation, let's see detailed. It's yet to update. Let me close this. It may take a while to update portfolio valuation. Let me just check portfolio valuation whether they have reflected. Not yet. Let's go to statement, because statement is the first thing to be updated. Not yet. So it takes a few minutes. Once it is reflected on the statement, portfolio will have shown reflected. So you have seen now I can buy one share. I didn't buy funds. Available funds, we see whether there is a pending order. Yes, it is still my paid. It means it has not been validated. Just confirm one more time. It may take a few seconds. Once it is validated, it will update on the state on my portfolio and also my statement. So that's how you buy one share using our portal. And you can put any share. Let me, in the interest of the others who had proposed, let me see, there's another share. Safaricom. Let's see whether we can buy Safaricom 2 shares. It's at 26.35. Yes, I can pick. We are buying this time. Let's use, I'm buying 2 share. Limit, we try fill or kill. And we buy. Again, summation, submit, order submitted successfully. If we look at the notifications, Safaricom is submitted and it is executed. It's here. Was I said fill or kill? Let's try I buy again 5 shares of Safaricom, but now at 26.2, that price 26.2, because it won't execute. Then we use immediate or cancel. Order successfully pressed, again notification. Order submitted for 5 shares. Where is it? It is here. But order have expired. Notice, order submitted, order expired. Why did it expire? Because I put immediate or cancel. Let's go to the watch list for Safaricom. I put 262. It is here. There is no surprise. Surprise is at 26.35. So I told the system, try and execute my order at 26. Since there is no surprise, the supply price is higher. That's why it was cancelled. So at least now you have seen fear or kill and also immediate or cancel. Let's go back to Q&A. So I pick questions, then we proceed with the presentation. So if I wanted to be a better day trader, do you have a different training sessions? Actually, these trainings for Wednesday are for NSE share trading, where I'm also training even on day trading. So we started with the basics, understanding the basics, understanding the market, how it works. And now the NSE rule. Those videos I've already shared. Let me share. Let me share so that I show you where I share those notes and also videos. And I also do for international stocks. I'm also starting for Forex and CFDs for those who are good in Forex. And I share notes on this blog. It's not AIB's blog. Let me close this. These are advertisements. This is for NSE. If you scroll down, these are the videos we have done. And they are detailed over 2 hours. You can watch slowly. There is NSE with the DigiTrader investing in Kenya, building wealth with indexes and ETFs. Now how you can pass wealth, how you can create wealth, how you build wealth at NSE, creating goals and making sure you get growth, building wealth and leaving legacy. And now for today, I've had the video. For international markets, again, it's at the international markets, then training. So I've tried to split the two so that it's easier for you. Again, videos and notes. And also if there's any spreadsheet, like this one has a spreadsheet, which you can download. Even for your NSE share trading, there's a spreadsheet. It's here. Tracker. If I open, we will use this because I want to do a bit of, I would add a few more columns, which can help you decide whether you want to buy or sell. So let me close that. Let me share this link again. I had already shared. So AIB, they don't have a blog. That's why I use my blog because it's already live. So let me pick a few questions, then we go back to presentations. With that precedented volatility next week, should I sell those that have already given me some profit? You don't need to panic. Basically, people will come in to buy, not to sell. Most people will come to buy. Remember, they have been told you can buy one share. And I like that way of marketing from NSE and CDSC and also brokers and CASIB. You can buy. They are not telling you you can sell one share. They are using you can buy. They are avoiding to say you can sell so that we don't have more buyers coming, sellers coming to the market. But you can sell. You know you can sell. But we are saying you from now onwards, you can buy one share. Meaning what? We are trying to drive demand for the shares. What will happen? Prices will shoot up. And we are coming to that slide where now you see why the prices will shoot up. What is the issue with having many splits on my statement? I don't get it. Initially, if you are to come to AIB and you request for statement, you'll get maybe a one pager showing you the transactions because there are not many. Now with these single small splits, you get those small entries in your statement, meaning the one pager you would have got, you can get even 100 pages. While our statement are not valid out there. It's like going to a bank where you have done multiple transactions and you're asking for your statement. They charge. So how much can you pay to be printed for those pages for your statement? On our side, we don't charge printing because you can access them via email. But again, when you said via email, you may need to print. So how many pages will you print? Again, those small transactions, will you be able to reconcile your statement to know how much AIB have deposited How many deposits have I made? How many have not been posted in my statement? How many transactions have been omitted on my statement? You see, now you may not be able to really reconcile your statement. We'll come to the downside, but I don't think it's that grave. It's only that now you have so many transactions in your statement. Collateral shortfall means you don't have enough cash to buy. Remember, when you're submitting, the system shows you the exact amount you can pay. You need to confirm that is the cash balance you have in your account. Split shares, repeat please, also heard we can buy less than 100. Yes, Wycliffe. I'm coming to this. In split, on the portal you have seen, it's not there on the app. Let me just show you again so that it is clear. Where is that for the app? Let me open screen again. I'm just opening the online portal just to show Wycliffe the split so that it is clear. I'm just logging in. Let me share. Let me remove that. Like now for apps, the splits, you can see the split. On the app, it is not there. We log into the app in a few. We see it's not there. Split means the number of orders that make up this quantity, 1024. Like there are 4 orders. It could be there's somebody who have put 24 shares, another one 100, another one 900, like that. So the total number of orders that make up 1024 are 4 orders. If you go down, there is this 16. There is also 13 on the sales side. It means 16 orders have been submitted to make up 742,975 quantity. So that's what split means. Buying one share less than 100, you have seen I didn't need to break down my order. I submitted 1 share executed, 2 share executed, and I submitted another one for 5 shares, which was cancelled. I hope one sharing. Delivery of the purchase shares cannot be sold. They are bought. No, get up. Intraday, let me even go back. I just confirm you are seeing my screen, my account. I want to sell BAT. Just confirm. Can you hear me? Let's check whether BAT have, because I know that I bought intraday. It is here BAT, and you can see Safaricom. Let me try to sell both of them. So we go to BAT. I don't mind selling at a loss, but let's see whether it can go through. I'm selling my 1 share. I will not change anything else. I'm selling. I get that. Order placed, stock not available. I may have bought, was it intraday? Which one did I buy intraday? Let me confirm whether it is Safaricom, because I know alternatively I can buy and sell if it is not Safaricom. Let me confirm if it is Safaricom. I may have bought both of them intraday delivery. 2 shares. Submit. Stock not available. I had bought both of them delivery. Let me pick 1 share. And I want to buy every day. How is the split? There is no supply, so I can't buy. CIC, where is CIC? 370. I think the difference is okay. I can buy this one intraday, just 1 share at 370. Buy and confirm. So order placed, it is executed. So we give it a few minutes as I pick the questions. Once it is reflected, it has reflected very fast. Okay, CIC is there. Let's go back. We try to sell CIC. They have just bought today. Let's see. CIC at 370 executed. So it is. Let's go back to CIC. At that, let's see whether I get that stock not available. Order successfully placed. Let's go to the order tab. Already sold. Intraday, you can do both, fully traded. So I'm not sure whether you selected the intraday. If you select intraday, you can buy and sell the same day. It's only on delivery where you can't sell the same day. You have bought. Intraday, you can do buy and sell. I noticed your ledger balance is negative. It's because me, I'm buying on credit for presentation, but it is not allowed in the market. I've shared the links. Kindly upload these on your YouTube. I'll actually upload this because I'm using my account. I need to hide a few details. I'll upload tonight so that tomorrow morning you have the video. All the other videos are there on that channel. Does the overall cost change when your order is executed using multiple splits? That's what I want us now to do. Let me go back to the presentation. We continue. I'll come back to Q&A because we need to see whether the cost changes. So that we don't excite you, then you're paying higher cost. So small trades versus your statement, we have seen. Sometimes the order is filled in several small parts instead of one big trade because of the splits. That's why I said you check splits. Those splits, if you're picking the whole quantity, it means you're executing your trade in small lots. And this can happen if there aren't enough shares available at your price in one go. You find there is no individual seller or buyer who is willing to give you a quantity equal to what you need. Remember, it is first in, first out. Even if there is 1,000, that's 1,000 could have come in after another maybe 10, one share, two, another 5 have come in. Remember, you start with the 5, come to 10 to 1, then the balance is executed with 1,000. And since you can't see that queue, who came in first, that is the risky nature of the splits. So you only need to be willing to take those small transactions. But again, if you know the amount that will be debited, you don't need to worry because you only need to check the balance that is in your account. So an example, you place an order for 200 shares. So you are buying 200 shares. There is available quantity, you can see 200. But the splits are also 200, meaning the makeup of those orders is one quantity order. That is 200 people have put one order. So you get 200 executions. And that is the risk we can see when we go to the app. And we don't have control over that. It's supposed to be NSE. Well, that's where executions happen. The prices you have seen, everything you have seen is directly from NSE. The broker doesn't have control. Then the reasons why your order may be split one, different sellers entering different quantities at your price. As I have said, first in, first out. You may have maybe small SIG orders, one orders, maybe 100 of them. Then another person comes and put a total of 100. So you have one transactions. The small transactions SIG order, the 100 of them you clear, then you pick the big one. It's not right. It's not right. Like when you pick 100, then you come and try now to fit those small orders. But that only affects your statement and contracts, because then you have a lot of reports to review. The system matches your order with the available seller or buyer until it is complete. That is NSE trading rule. Matching of orders, that is controlled by NSE. It's anchored on NSE trading rule. We can't change that. It's only NSE who can change. They have made their system. Our system will automatically pick that. Or orders, they added to the queue. Remember, first person to press in is the first person on the queue. If there is execution, they are the one to be served. It's the same way we enter Matatu. The first person on the queue enters the Matatu. It's the same thing here. When you are buying, the first person is the one to be executed. First in, first out, best price first. That is the rule that is there on NSE. That's why you see on the bid side, it's top price shown. On the supply side, is top, which means what? On the bid side, it's the best price for the buyers. On the sell side, it's the best price for the sellers. So that's how market works. So how will this show on your statement? One, each partial field appears as a separate line in your statement. You may get multiple trade confirmation messages either on email, just for one order. Because remember, one order may execute in small lots. If you are receiving individual contracts, then those are the number of emails you receive. So your statement will show small transactions inside. I wish mine could show. Let me just check the statement the way it looks. Whether it has those small transactions. It has only the big ones. I would have shown you how it will appear with the breakdown. But again, it makes your statement lengthy if you are printing. So let's go on the cost. So for all the trades you do, there are different costs. One of them is a broker commission. Then there is CDSC fee, NSE, CMA, and stamp duty. So multiple small trades can mean slightly higher total cost because they are averaged than just executing a single trade. Let's just see that what will happen. I want to go to the Excel spreadsheet. We'll use that. I prefer using that. Let me share. And if you have a question, put on the chat. Where is this? Let's go to that spreadsheet. I'm not sure whether I'm editor. Let me just check. I believe I am an editor. Let me just add an empty sheet. I'll pick various costs, populate, then we calculate. Let me go to AIB Access website because that's where the breakdown for costs is. Then at the fee tariff. That is, if you go to downloads, you scroll down, you should get fee tariffs. I want to pick those costs. So broker commission, assuming you're trading online, you're expect to 1.76. Anything below and above that, it's around 1.3. Is it 1.6? Because the total cost comes to around 2.1. So NSC, we have CMA guarantee fund. CMA guarantee fund is 0.01. So this CMA guarantee fund. I won't fill the full name because of time. We have CMA transaction levy. I've seen clients say brokers are expensive. Today you might realize brokers are not expensive in the market. As you can see, there are costs that you may not have seen. NSE transaction levy is 0.12. Then we have CDSC guarantee fund. CDSC guarantee fund is 0.01. These are percentages. A transaction. it is 0.08, 0.08. Then we have stamp duty. Stamp duty is 2 Kenya shillings for every 10,000 used. So this for every 10,000 Kenya shillings used, you pay 2 shillings. Now, I wish I was able to generate contract. I see for the small trades whether I've been charged stamp duty, because then this factors into your cost. So here, we'll start with previous. Let me add some columns above, some rows, sorry. So previously, which is costing, let's say 20, and you're buying 100 shares, it means you are paying cost for 100 share. We are not multiplying individual shares. So here, it's 20 times 100 times your brokerage. Let me rock cell 4 and 5 because I want to drag the formula in the interest of time. And these are percentages. So I need to divide this by 100. Then I rock cell 4 and cell 5. Because I need to drag the formula because of time. Hash. So that's the brokerage you pay. Then down up to CDSC, but here you are paying 2 bob for stamp duty. So the total cost paid here, if you are to sum, you sum this, it's around 32 shillings. That's what you'd have paid before. Now again, we come today, current, same price, that is 20, but here you're buying 1 share, but all these you buy 100 transactions. So you want to see for every share how much you can pay. Again, we can copy the formula because of time. Let me just copy this formula. We'll only change the cell, because this time I'm referencing to cell E. Cell E in commission. So 0.26, again, drag down. Remember stamp duty, 2 bob for each transaction. So we drag from this cost here down. This is per trade, per single trade. You have done 100 transactions. So this times 100. You might find paying that cost. Because these are single transactions. Because you're adding for each, you're adding that cost. Hopefully they are not charging these 2 bob. Because if they charge, then you might end up paying lower cost. But then why would be because of averaging? Remember, this one I'm not averaging, rounding off. I'm not supposed to round off because system doesn't round off. Let me undo. So if stamp duty is being charged on each transaction, you might end up paying higher cost. That is the risky nature of the small trades. Hopefully stamp duty is not included. Because then it should be separate. If it is separate, then you're adding it here. Equals this plus the 2 bob. It all depends on the broker system, how they work. But remember, as I said, we are not rounding off. Huh? So you may find, because this is rounded off figure, you might find the cost may be higher. Again, these small transactions, you may execute at different prices. Remember, for a single trade, you executed at 12. Now, if it was a market order, and maybe another trade executed at, let's say, 21, it means the whole mathematics changes. So you see the risky nature of those small trades. Unless you're guaranteed you're executing at the same price, and that broker system and NSE system doesn't at all try to round off. Because if you have to round off these to 2 decimals, it comes to 3 bob. If you have to round off the rest, again, you notice there should be some effect. So you need to be very careful when executing those small trades, especially for market orders. The cost may be high, because now if you had to go do market order and it's executed 20 and 21, remember the cost will be different. And it also depends with the number of shares. So you need to be worried of that. But it's nothing to be worried about. The cost, it won't go to thousands. It won't go to thousands. But remember, it is a cost you are paying to the broker. Maybe that cost would have bought you another share, even if it is a small figure. Now, if you're doing big trades, that's when you need to be worried, because the bigger the trade, the higher the cost. So small trades are normal and often unavoidable because of those splits. There are people who will come, once the app is upgraded, that's when now you start seeing those splits increase. Always check your statement carefully to understand why you see multiple entries. And also consider the pricing. Also be aware of micro trade costs, because that will help you manage your expenses. Most trades goes off stamp duty. If you are executing a big trade, remember stamp duty changes. But as I said, it might not be that significant. If you are doing a big trade, then a small shilling may not worry you. So again, now tips to trade online and also on the portal app and online portal. Knowing when to place one big trade or several small ones can save you money and also make tracking easier. So by checking the splits, you can decide whether you get one big trade execution, which will not mess your statement, or you get small transaction. And it is you to make that decision. And I hope we'll have time, maybe at the end, I'll check whether the app have the splits. I know on the portal it is there. Also understanding market versus remit and market to remit orders. It helps you control the prices. Remember, as I've shown you, cost may go high if you're using market order and you clear several prices. Liquidity affects how fast and at what price you can buy or sell. So let's compare one big order, that is you're executing 100 orders as one order, or executing that 100 into small. It could have fewer one big and also simpler high liquid stocks. For several small orders, then and also availability of shares may be a challenge. But now these have been resolved, because now you can do on one board. It's not like previously where you'd split. So how to avoid clutter on your statement and also on your reports? Too many tiny trades can make it hard to track your performance. So that's why splits play a very great role. Try and group your buy and sells into fewer, bigger transactions where possible. So check splits. If splits are high, it tells you the makeup of those orders. If they are low, then you can execute, but nothing stops. Remember our statement, there is nowhere you can use it for any support unless you're going to CMA or to a court. And that may come when maybe you are doing succession and it's not you, it is your beneficiary. That time they would be required maybe to print statement. Do they print 100 pages or do they print one? So that's on small orders. Huh? So let's go to, let me check. I don't want to skip. When you go to market versus limit orders, market, as I explained, is buy or sell orders immediately at the best available price. You get fast execution, but you have less control. Limit is where you set the price, but you have control. But it may take longer to fill, especially if you pick a lower price. If you pick at the top, if you're buying and you put at the top bid, you only need to check the split and the quantity that is there. If it is lower, there are high chances of you getting the order. And we have seen example on the system. Huh? Now, how liquidity works and why spreads are tighter. Liquidity tells you how easy it is to buy or sell without moving the prices too much. Huh? So if you notice there is a small difference between the top bid and top ask, then it's very easy to do even intraday. You can easily buy and sell the same day, but again, gains may be lower. So high liquidity means smaller difference between buying and selling price, meaning tight spreads. And I've shown you, you just pick the top bid, top ask, do the difference. And the top ask is not in terms of the price, it is on the Q side, which one is shown at the top. I'm not talking about the in terms of the pricing. It is in terms of the arrangement in the platform. The top one on the bid side and the top one on the supply side. The ones that are shown on the top, you get the difference. That gives you the spread. And the tighter the spread, that is the difference between the two prices is narrower. It means high liquidity. You can easily buy and sell. So this, and I hope now from next week, we'll see increased liquidity even in the shares that you couldn't be able to buy and sell the same day. Because now we expect people to come and start pumping their small orders. And if you didn't notice, if you did ODD previously, the prices at sometimes would be higher than what is on normal or lower, depending on demand and supply. So odd spreads, like where you would buy at 10 and sell it around 980. So you have a spread of around 20 cents, which you are losing. Now with the new spreads, you find even that spread have gone lower to around 2 cents. And we have seen with some counters. Hopefully that is the intention of NSE. Trading costs and broker charges. So every trade, as we have seen, it has several charges, not just broker fee. I see people say broker expensive. The amount that is debited on your account is not just broker commission. It has those charges I've shown you on that spreadsheet. There is NSE, CMA, CDSC, and stamp duty, which also take share of each transaction. Even those small trades, you are doing one share, they also have their own cost. If you go to the contracting report, you get the details. So understanding this helps you trade smart and also save money. Now we come to the argument that is always on social media. Broker fee. Brokers are expensive. Today you might find brokers are not expensive. Why? Brokers only charge you, they charge for the trades that happen through them. Remember in NSE we have around 26. I'm not sure whether we have had more brokers. So each broker, they are earning their own fee, 1 point whatever % they charge for just running the trades within their platforms. However, NSE, CMA, CDSC, and stamp duty, which goes to the government, they take from the whole market, from the 26 brokers, not from just one. So even if you see their cost is lower here, 0.01, 0.02, at the end of the day, they are the one making the huge profit. So they collect from all the trades in the market. So for them, they earn even higher than the broker. For them, they're earning from all brokers. That is from all trades. So if you do a trade with the AIB and go do another trade with another broker, you are paying NSE twice. Because they are charging you from AIB, they're also charging you from the other broker. So when we are bringing this discussion, I've seen even with proposals sent to NSE, factor this out. Also tell them, can you also lower your costs? Actually, they waive in some transaction. I know guarantee levies, those ones you can't, because those are guarantee you in case of any failed settlement. CMA and CDSC can use that to reimburse your money in case a market crashes. I think it is NSE, it is which one? CMA guarantee and CDSC guarantee. Those are there to caution investors. But NSE transaction, CDSC transaction, CMA transaction, we pay them for their services. They collect from all brokers, from all trades that have happened in the market. Broker only charges you for the transactions that go through them. So brokers are not expensive. It is the whole market. So if we want the broker fee to be reviewed, even the other fees, remember, they play part in the market. That's why now if you combine the whole charge, if you are trading with different brokers, then your cost goes high. Because it also depends on what the other broker is charging you. You might go to another broker because they are charging you a 0.8% commission to trade with them, and again trading with the IB. But remember, NSE, CDSC, and CMA, and some don't change. Yeah? Those ones, they are fixed. So how to minimize unnecessary charges? Avoid too many tiny trades. If you can get a split of one, but again, when you go to the app, you won't be able to see the splits. That's the downside. Huh? But those fees, they're just small. They won't affect you at all. Combine orders where possible. Don't try to trade in the morning 100, then you're waiting in the evening maybe to trade another 100. Price will have moved. Try and reduce those, because every trade has its own cost. And consider buying during active trading hours, 9:30 to 3 p.m. when market is open. When the portal and app shows you open, that is market. If it shows you closed, it is not the market. It's not the app that is, or your account which is closed, it is the market. And that is from 3 p.m. the following working day. So closed is not your account, it is the market. Then at 9, between 8:30 and 9, you see trading. That's when we are connecting to NSE. There is no trading that is happening. Then at exactly between 9 and 9:30, it's auction. It is pre-open. Pre-open, you can pump limit orders, those orders with price. At exactly 9:30, it is auction time when the first trade happens and the market opens. So try as much as you can during trading hours. Now prices will be volatile once we activate the app, because everybody now will be able to submit those small trades. You need to be very careful. You don't put with previous day's closing price, then the price goes against you. And always watch for splits. If you can access the portal first, see the splits, then you can submit the order. But that should not worry you, because those are transactions within a broker system. It should not worry you a lot, but I wanted to bring that out so that when you get your statement and it is 20 pages, please don't go to NSE to complain the broker have given you a 20-page statement. Tell them your system have executed 20 transactions of single trades, because that's where execution happened. We upload what they have given us. The reason why I'm doing these trainings is to avoid you being misled by people out there who may have their own personal interest in the market. They will excite you, but at the end of the day, it is you as the investor who pays the price. Those small transactions, how long will it take for you to check? But somebody is telling you otherwise. So at least now you know where everything is. If we need compounded statements, NSE, they give us that functionality. They give us those trades. We will be happy to give you. But on our side, we are just implementing the new changes because they were approved by the regulator. So before you buy or sell, you need to understand fee structures. It's very important because, again, as I said, in international market, fee structure plays a great role. In NSE, we are only allowed to charge commission. In international market, however, the brokers are at liberty of either charging you commission or adding spreads. Spreads is different from the spread I talked previously. It's within the price they add the cost. You find the price that you're given. If Safaricom is trading at 12, we are showing you 13. That 1 shilling is the cost we are taking. We will tell you it is a commission free. Yet the price is not from the market. So you are paying higher price, even expensive cost than you would have done with a commission. That's why NSE it is commission based. I hope they will not one day think of telling the broker to remove the commission. Because if they tell us remove the commission, we'll go for spread. Do you want to pay more than what is in the market? So always know the percentage rates and the minimum fee of your broker. AIB, as I've said, DigiTrade, if you are trading on the app and portal, commission is 1.3. The other levies, they don't change. We only have one maintenance fee, 200. Next remaining answer, then next year you only pay 200. If you opened using manual forms, unfortunately that is 1,000. But most accounts we always encourage go digital. It's much easier. And we don't have any other hidden costs. All our fee tariffs are on our website. Always ask for full breakdown of the costs. Always ask for full breakdowns so that the broker doesn't hide the other costs. Ours, everything is on our website. And you can always request contract. If you receive contract notes, everything is on the contract notes. Some fees are fixed like NSE, CMA, CDSC, stamp duty. Those ones you can't change. For broker commission, that can always be varied depending on the negotiation. So that's why I decided to work. And always check whether broker have a minimum charge. We don't have. We charge irrespective of the amount or the trade you are doing. So when to buy shares, good timing and good research. It makes difference in investing. Always, like now, we expect, as I've told you, next week, there will be a lot of market activity. If you don't want to buy wrong, is the time, because immediately people start buying on DigiTrader, we would expect the market to shoot up. Also look at company numbers, market news, and your personal goals. These we have talked before. Market news affect market performance and also prices. Your own goals. What do you want to do with investment? Are you buying to sell, make profit? Are you buying for long term? Are you saving for school fees? Are you saving for your retirement? Do you want to just be getting dividends? What is your target? Also check how the company is performing. Is it making profit? Is it giving dividend? What is its dividend yield? So you need to understand company financials, but not detailed. You don't need to know detailed. Check whether their revenue is growing. Are they making money? Dividend history and their payout ratio. So how much have they been giving as dividend? Have they been giving regularly? Which year didn't they give? So that tells you, you check what happened that year. Is there a possibility of the same thing happening? If they didn't give a dividend, they give a bonus. If they give a bonus, then it meant instead of giving you cash, they gave you shares, they then reinvested the dividend. Also check debt levels, because that affects even their profits, and also cash flow. So using market news and sector trends for news about the company and its industry. These you can always get from our research. If you're following news outside NSE approved data vendors, always verify with another source. Buy when sector is growing or when there is positive company news, and avoid rushing in after big hype. Why am I saying this? Unless you have checked the facts. There is an article that came in, I think yesterday or the previous day, about HFCK, and everybody rushed to buy. You pushed the prices up. Why was that? Just because, is it Francis Modaura or what is his name? Let me check his name. And also Kimani Ichung'wah. They bought shares. HFCK. Let me just confirm that. HFCK Kenya. And that hyped the market. Prices went up. And people rushed in. Let me see, Francis. I'm forgetting his name. There's somebody who bought so many shares. It's not Francis, it's CF News. KRA former, Anthony Mwaura. I also know Kimani Ichung'wah, the Honorable Kimani Ichung'wah. He may have bought shares. I'm not sure whether it is a social media hype. Maybe you can confirm for me whether he did that. But have you asked yourself why they are buying? Before you even buy. That's the first question you ask yourself. Here, we are dealing with somebody who is in parliament, especially senior level. I'm not sure where Anthony, is it Anthony Mwaura works? Maybe I can check Anthony, because it means they have information that we don't have. I think he's in Kura as a board chair. KRA. Yeah, this is in 2024. I'm looking for the current one. There is no information on his current post, but HFCK, what do? They deal with housing. We have affordable housing. You can relate. Already, most of those projects have been handed over. Do you foresee HFCK getting into now affordable housing projects? There is that possibility. So this could be the right time to buy before they push the prices up. The same thing that happened with KPLC. Before Dinyoro came in, prices were a bit low. When he left the parliamentary committees, prices shot up. But don't buy based on those sentiment. Always check the facts. So for HFCK, before you buy, check our research. What are they saying? If they have not done that, please send them email, ask them, call. Tell our customer service, I want to talk to research. They tell you what is happening with HFCK and what is the future. Ask as many questions so that you don't get in because of the hype. He will buy it when it is low. When it goes up, he sells. He has made a profit. But for him, for most of them, they try to get into the majority shareholders so that they have control over those companies. And again, we look where those companies are investing. Is government involved? Again, this is the market. That is the sad truth. This is the market. So if let's say cement demand is rising, a cement company announces a new factory, its share might be worth buying before price jump. I've used this example because I've not quoted any company. I don't want you to go and say I said KQ, they are doing this, Mumias, they are doing this. No, I've just used this as an example. We have not quoted any company. So if you see a company is the demand for their services and products have increased, there is a possibility of price appreciating. And also if they are announcing new innovations and new growth, always be on the lookout for that. So before buying, you need to set goals. This we have done before. I'm just going through the recap of the previous tutorials. You can go to my blog. I'll share that link again. Go through those videos. And if you have any question, my number is always available 24/7. WhatsApp. So decide why you are buying. Always make sure you know why you are buying. Are you looking at income from dividend? Then that means you will be targeting dividend stocks. Are you looking from growth, from price increase? Then you target growth stocks. Are you looking both? Then you look for both. In NSE, unfortunately, you may not be able to classify these stocks, only dividend stocks. Because any stock that gives dividend is a dividend stock. For growth, you may find even dividend stocks are also growth stocks. But growth stocks are those that appreciate in price. And now with one share, we'd expect most of them to also move towards growth stocks as they also give dividend. But again, one share, how much of a dividend can you be paid? And I like that question that was asked, the minimum amount of money you can receive as dividend. Safaricom is giving 0.65 dividend times your one share. Yeah, you're getting a 0.65 cents. Will they said that dividend to you? It means they can only use that dividend for investment. Will company now stop paying dividend and decide to invest? Instead of that, they start giving bonus shares. I hope we don't go that route. Or they say up to a certain amount, we pay dividend. The rest, they invest. Maybe give them additional shares or they forfeit. You see now, there will be a problem. But that's not our headache. Dividend are held, are handled by the registrars and CDSC. So I hope they already factored that out, but with time we'll know what will happen. Because initially you'd also buy one share, but that you need to watch and see what happens. So your goal helps you choose the right stocks and when to sell. So if your goal is steady income, then you'll be looking for high dividend stocks. You can go for banking stocks, also some of agricultural stocks, and even telecommunication. I think Safaricom gives a good dividend annual. It's only that they split it into 3. But on the spreadsheet that I've shared, you get the list of stocks and when they announce dividend. You only need to position yourself. Also look past history, like last year. Within those periods, how much did they pay in form of dividends? A minute, I pick just this call. So sorry for that. Let's continue. So on the spreadsheet, I've given you the list of stocks. You only need to check how the dividend they gave last year and maybe previous year and see if it's something you're also willing to take next year. They might give a similar dividend if they declare. So then we come to key financial metrics that you need to factor when deciding to buy shares. These are the numbers that help you judge if a share is worth buying. They show you how much profit, value, and safety a company offers. One of them is earning per share, EPS. It's how much profit a company makes for each share. Higher EPS means more profit per share. So an example, if a company earns, let's say they have made a profit of 100 million and have 50 million shares, then the EPS will be the earnings divided by the number of shares they are floated. This you can always get from company financials. Let me just check if you can get that. Maybe I can use Equity Bank. Let me just check their financials. Financial statements. Whether it has that. It's always published either on their website. You'll also get it on our website. Let me see if they declare those. Yes, they do. Let me just share this. We see where you can get, but I'm not sure whether this is the standard reporting template for banks or all stocks. I think it is usually dictated by the regulator. Hopefully, it is standard across the industry. If you go to financial statement audited, let's say for Equity Bank, you scroll down, you don't even need to do any computation. At the bottom, you see earning per share, EPS, basic and diluted. You can always check. Then you check for the period. You're checking, it's for the bank. So you check for the bank, it's there. You also check for group and also for the company. So it is I think it is the group that is listed as a company. So you find it's around 3.2. Have they given, is there a comparison with last year? Yes, they have given for the last year, 2024 compared with 2023. So you can always check the earnings per share. There is also dividend per share. That is the dividend they have paid per share. That we go through on audited financial statements and also an audited half year. Most of them they are mandated by a regulator to share that. You can always get that from our website. Also on their own websites, each company, and also NSE, CMA, I think they also post. So you can get earning per share, higher earning per share, then more profit. Then we have a PE ratio, price to earning ratio. This is price divided by now earning per share. So like for equity, you take its current price, you divide now with what we have seen around, is it 3? Around 5, but then you need the current one. That's why in NSE, this data is not publicly available. If it was publicly available, then you'd have the current values. But these are where our research gets that data from the financials. So price to earning ratio, it tells you how many years it would take to earn back the share price from the profit. So the price that you are paying when buying, that is the current price of the share. It will tell you how long it would take for you to make gains. So lower PE can mean a cheap stock. High means it is expensive or fast growing stock. So like if you take an example, a share price is 20 and its EPS is 2 bob. Then if you are to divide, it means you pay 10 years earnings for just one share. So we'll come to this next week because of time. I'll come and show you how now it is calculated because we need, as I said, I need to expand now the dividend risk to add these because they help you make decisions. Dividend yield is dividend divided by the share price, then times 100. So the dividend that is shown on the NSE price list, you divide by the current price times 100. It tells you the percentage return you get from dividend each year based on the share price. Higher yield, more income from your investment. That's an example. Like if a company is giving 50, 30, its dividend yield is 5%. So you get 5% return from your investment. Then there is a price to book ratio. It compares the share price to company's net assets per share. Less than 1 can mean share is undervalued. I've seen people asking, is this share overvalued or undervalued? So you can use price to book. And price to book, it means price divided by book value per share. All these you can get from company financials. Let me see whether we can get for equity book value per share. Is it included? Some of these, if they are not included, then within the same financials, there are metrics you can use to calculate. You may need to calculate. I'm not sure whether they have given in their commentary. I'm just checking through performing. You can check within the company financials, but next week I'll show you now how to do the calculations and how you can use them now to make decisions. Then there is a quick ratio. It's the liquidity. It measures how easily a company can pay short-term debts without selling inventory. That means, is company able to pay from its pocket without selling assets? In a ratio above 1, it means that company is safe to buy, because it means they are using their own revenue to pay for debts. Current assets, inventory, if by current liability. So anything above 1, it means it is safe. Anything below that, then there are risks you take. So these metrics gives you gross profit, value, income, and financial health. This is what our research uses when they are giving you those recommendations and daily reports. So if you learn how to use these, then you can automate Excel so that you also do it on your side and compare notes with what AIB tells you. So always compare with other companies in the same industry before deciding to buy. So you compare, like if it is equity, you compare with a stock within the same industry, banking sector. So data source, again, annual reports and financial statements. These are, you can get EPS, dividend per share, book value per share. Now for you to calculate now price to book ratio. Then in the balance sheet, you can get quick ratio. These are reports you can get either on each company's website, NSE, and also on our website. In terms of prices, you can get them from the app or portal or even NSE website. This to calculate now other details like PE, yield, and price to book. Then when to sell? When you buy shares, when do you want to sell? Again, it goes with your goal. If you're targeting retirement, then you're not selling. You're targeting to sell maybe in your retirement or use dividend in your retirement and pass that wealth to your beneficiary. However, if you have decided I will sell after some years, then selling at the right time is as important as buying at the right time. Know your reasons before you press the sell button. Why? Immediately you confirm you have seen there is no time to amend the order if you have matched the price. Only sell for profit, hold for growth. So if you have made gains, like now, market is excited and you notice you have made enough gains, you can decide to sell. But don't withdraw, buy another share that is giving you dividend. Or you hold for growth. Shares keeps on appreciating in price, then maybe later you can decide to sell. If a counter is giving you dividend, don't even try to sell. Dividend is free money. If you have to sell on emergency. That is if you need quick cash for emergency. That time, sell a share that have given you dividend. You have already taken dividend. And their dividend yield is high. Then, after you get money, come buy back those shares that you sold. Then finally, avoid panic selling during dips. This market is affected even by politics. Politics comes in, price shoots down. Don't sell because the market is going down. Always check why is that share going down. It could be there, maybe it is market mood. Like now, market mood is high. Everybody want to buy. They are shooting the prices up. Then we realize, oh, there are issues with one share. We start selling, we panic. Again, we push prices down. If it is not company problems, like they are making losses or they are going into liquidation or such, anything that is affecting company, that something that is not temporary, don't even panic. If it is something that is temporary, prices will adjust. Always check company fundamentals before selling in a dip. These ones you can always call a research and ask. Again, calculations, they are here. If you are able to do these and others that we do next week, so purpose to come that week, because we go into details how you get this from financials and calculate. You can use them to check company fundamentals, and that can tell you why that company, maybe the prices are going down. No? And long-term investors, you ride out of temporary drops. When prices go down, that is the time to buy. Don't be hyped to buy when market is up. When you see market is going down and you know this is a strong company, buy that time. Then you hold. Again, you can use a PE ratio to compare similar companies to see if it is overpriced. Like a high PE ratio, if you compare it with a similar company, then it might mean now the company is overpriced. So for those who have asked, is this company overvalued? Always check the PE ratio, compare with another company in the same sector, because you're not comparing with a different sector. Raw dividend yield, you compare with historical average dividend they have given, the average they have given for some years. It may also signal overvaluation. So let's go to Q&A. And let me go to the first slide so that you can take my WhatsApp number and email, just in case you want to contact me. As I go through that, let me share that link for videos where I'll share blog posts. That's where I post everything on the trainings. Let me also share WhatsApp channel where I share these videos and also other materials. Now I come and pick Q&A. This is the time now to put your question. I will try and answer them in the next few minutes. So let me pick that link. Copy. You just need to follow that channel. You're not joining. This is just a channel. You just follow. So let's go to the next question. Uploading, that I will do. Does overall cost change when your order is executed using small splits? There will be a small variance, but it's not that big. Maybe in terms of, it won't be more than 10 unless you're buying huge shares. I'm currently based in Uganda. Can I make payment through M-Pesa agent using AIB Paybill? Then use those funds to purchase shares. It will be tricky because are they able to capture account number? If they are able, because account number is a CDSC number, it will automatically post in your account. I would advise if you already have access to M-Pesa, just deposit directly. from your M-Pesa app or M-Pesa SDK push. It's there on the app. You just go to FAD, M-Pesa deposit, you just click deposit. If that number is what we have, you get a pop-up. Then you can proceed. So if you're able to transact with M-Pesa from Uganda, you're same as a Kenyan. Safaricom is paying dividends 8 months. What is the likely price impact post-dividend date? Again, one share trading, that might exact the market. So you might expect the prices to go either way. In most of the time, it is after book closure, which is already passed because it was 31st July. If it went down, I don't see it going further down. With market excitement, you might find it going up, maybe from next week when the app is ready for one share trading. Can I consolidate my portfolio from various brokers into one? If yes. Yes, it's possible. In our case, you only need to go to DigiTrader or Portal. You open new trading account. Click open new trading account. Submit your details. Your account will be open. Once you receive the CDSC number, you go to the other broker. You tell them, I want to transfer to AIB. They'll give you transfer form, which they fill in the shares that you are transferring. You sign. They capture in CDSC. They need to capture that and stamp. You bring that to AIB. If you're not able to come, just scan a clear copy. Ask the broker to scan for you a clear copy of that form. Submit to us. We will accept and submit that form, a clear copy to CDSC, finalize that transaction. What trading strategy do you prefer, fundamental or technical, and why? I think it depends on the investor. If you're able to do technical analysis, the better. If it is fundamentals, because that tells you now company performance. It all depends with the investor and also your long-term goal. If you're targeting dividend, then you don't need to do this fundamental or technical analysis. Your strategy is dividend, which stocks are giving you good dividend. So for fundamental and technical analysis, it's for growth stocks, because you need to know, am I buying a counter that will appreciate in price, or am I buying a counter that has a potential of giving me dividend return? So with intraday, will the stock be available for sale the following day in case price doesn't move on the same day? Intraday only works the same day. The following day, you can't do anything. Actually, the following day, the share now converts into delivery. You have to wait for 3 days. It's only the same day that you can do multiple transactions. So if order is split, it will cost more. Again, it depends on the number of shares. Remember, stamp duty is actually the major culprit here. It changes with the number of shares you are buying. In terms of levies, I don't think there is much of a change, because then we moved from the split into 2 boards. But again, you need to be wary of the averaging, because that may affect how much you pay. Thank you, Mwendo. For the app, I don't think they split, but as I said, we have not updated. After update, that's when I'll come and show you the app. Hopefully, they will have added the splits. If you see a one split, just go for it, because there it is a single order with a makeup of that total you can see. If there are several splits, it's you to make decision. Do you want these small transactions? If you don't want those small transactions, then you may need to wait. But again, remember, prices are not waiting. It's always good, just execute, but at least now you know what will happen to your statement. In case you see so many transactions, you already know what is happening. Don't blame the broker. Wycliffe, confirm you can hear me. Good, Nancy and Joel. It's only that those names didn't come out clear. My number is 0723 384 775. Let me share it on the chat. But also it is in the presentations and also on the videos. I'm not editing. When I'm editing, I'm only removing my personal trading details so that you don't make mistake and fund my account when you're funding. That is, you use my CDSC number to deposit in my account, which is wrong. Briefly take us through how to evaluate if it is viable to join the party and if before the party is over and still make something after transaction is done. I think for them, they just want to become a majority shareholder. They won't leave. He didn't leave KPLC. But that time you start seeing big chunks of trades happening. Maybe that's time he's offloading. That's why it's very important to check splits. If you see 1 million shares on offer and it is just one order, know there is a big person exiting that company. Now go to their news, see why. That way, you know whether you want to exit with them because they are not exiting for a good reason. Even them they bought to gain. So if they're exiting, you also need to ask yourself, why is this person exiting? Then you make that decision. The template, just click on that link I've shared for the blog. It's there. There's that link. But if you have made gains, it's always good. If the share is not giving you dividend, then you're holding that share. It will never help you in future. It's always good to sell, buy a dividend stock. We have gone that on some of the videos that are on that link. On NSE, which are the top 5 growth stocks and top 5 high dividend stocks? These I may need to compare for you. Be sure to check this link, the WhatsApp. Just join that channel. I will do this for you. I will pick the top 5 growth stocks. Actually, I will populate the list on that Excel spreadsheet that is on my blog. Once I populate, you'll be able now to arrange every day. And it is an Excel sheet that you can save on your side so that you can also be changing every day. Because even growth stocks, they keep on changing. Remember, price keeps on changing. Dividends, I think most of them, Stanchart, Williamson, there is Captoro. Those are, I know they are big ones. And there are also others that follow that rank. High dividend stocks are the ones that give high dividend. But again, you have to do dividend yield to see the return. For growth stocks, I'm looking to buy low and sell high, maybe in 3 to 5 years after price increase. But now with one share, we don't know where the market will go. It might be volatile, very volatile. You see the way in international market, you tell somebody in NVIDIA and they are like, that counter, I need to watch it, it's very volatile. NSE might become like NVIDIA, where price, even within the same trading session, they go low, go high. For dividend stocks, good. Hold them for long term, pass to your beneficiary. You can use now those dividends in your retirement. Which NSE stock would be best to hold and not sell for next year, 3 years? This one I would request you go to our website, aibaccessafrica.com, under research. You see the recommendations. For them, they have done that technical analysis. If they have not given even the number of years you can hold, please ask them. Let them give those details. Updating CDSC account on AIB, just go to our website, AIB Access Africa. Under downloads, the first form is individual account opening form. Download our AIB form on the button. Then there is a link for CDSC one form. Fill those 2 forms and submit to our email info@aibaccessafrica.com, and attach on our form at the end, you see the required attachments. Also check the CDSC one, because we also need to update the CDSC. Make sure when you scan back, it is a clear copy. Otherwise, CDSC, they will reject your form. It's not us who reject, it is CDSC. Why don't we see the high number of purchases like 1 million on the order book or recent executions. Most of those orders, they come from fund managers. They're the ones who give these block trades. They have already seen is their demand. So when they are submitting order, they know it will come and clear immediately. You won't see. You only see other executions. But now with one share, because we are buying all of us, you might see now numbers starting to shoot. That's why splits are very important. You don't see 1 million, yet it is 1 million people who are buying one share. But for a single transaction of 1 million, you will never see it. These are people seated down watching the market. And when they decide, I want to buy and I want to sell, that trade executes immediately. So on the executions, that's where you see those executions. And they are not executed privately. These are people who sit down, agree on the price. You see the spread. They decide, let's buy and sell within that spread. The order will execute immediately. Or, and I see they have allowed, and I hope this is still there, where they allow you to put the minimum quantity that can execute. For them, they put, if it is 1 million, they lock it to 1 million. So unless you order have 1 million, it won't. And that's where fear or kill, immediate or cancel comes in. Because they want to submit. If it doesn't execute, they cancel. But it's not market malpractice. It is allowed in NSE system. There are no other categories. It is the same category. I've explained. These are our traders, broker traders. They are given orders at this price. Fear or kill. It doesn't. So it means at the time I'm submitting my fear or kill of 1 million, there is another person submitting the same order. It will execute. But it is not market because the system allows that. Immediate or cancel. And they are putting price that you match. There are also other parameters they put which ensures their trade matches. But it is not market malpractice, it is allowed in NSE. Are there charges of updating? No, we don't charge unless CDSC, and they will tell you. CDSC, they will tell you. But I don't think there is any. There is no charge. I've not seen, because you're only updating your details. Is it better to receive dividend to bank account or to M-Pesa? There is no difference. If you receive to the bank or M-Pesa, either way, if you want to reinvest, you have to put it back to the broker. The only difference is on the cost. You find on bank, they do EFT. EFT is around, is it 50 bob? It depends with your bank. So you only need to check with the bank. Then M-Pesa is the standard M-Pesa charges. It doesn't, there is not much difference. But as Victor have said, M-Pesa would be convenient because they are receiving directly. But again, their registrars who decide I'm not paying via M-Pesa. And it is their decision. Broker can't override that. Unfortunately, that is there in the market. I know most of you have got register and they tell you don't pay via M-Pesa. There's nothing else you can do. But you only need to check with your bank. EFT charges. What your bank charges. Let's go to Q&A. If you check whether there are questions. What's the issue with many splits on my statement? The length of the statement. You know, you have so many. In a single day, you can have 20 pages. But it should not worry you. Remember on the app we show you, is it top 25, top 5? On the portal you see everything. So if you need to see full statement, then it's the same thing with the bank. If you're doing small transactions, your statement will be lengthy. If you're just doing one transaction, it will be just one pager. Only that now for bank, you use that statement maybe to secure or not, and you incur charge to print. For IB, I don't think there are costs. The only reason I brought this up, you don't go to NSE and you're saying broker have posted so many transactions on my statement. It's not the broker, it's what we are receiving from NSE. Any other question on the chat? So I've given you the WhatsApp channel, just follow that. And also blog where you can download notes or trackers, also videos. I'm also on that blog. I'll also be creating dividend calculator. I think there is one that is there. Let me see whether it is working before I send you to it. Dividend calculator and other calculators and advisor platforms. Huh? So I want to automate. On my side, I've decided to automate most of this stuff. Huh? Let me see if this calculator. Yeah, let me just show you briefly. It's there, the calculator. Let me stop sharing this. I'm trying to automate because international markets, it's possible. I'm trying to do some of these things at NSE. Like now, there's a dividend calculator for Kenya. If you know the number of shares you have on Bukrosha, and you know the dividend the company is paying, like 20, you click calculate, it gives you the gross dividend. So that is the dividend times the number of shares. Then the withholding tax, because this we ignore, that will be debited, then the net amount that you receive. So you'll be sure this amount now less bank transfers. So with this calculator, and you know which mode, how much you are charged for M-Pesa and how much you are charged for EFT in the bank, you can do your mathematics and decide whether you want to go with M-Pesa or bank. If M-Pesa is charging you 50 to receive this amount, so you receive 21,800. If bank is charging you 150, then it's good to go to M-Pesa. But again, check M-Pesa charges. If you're a foreigner, again, you only need to change it, and it gives you the tax that you'll be charged as a foreigner. Again, gives you the calculation. It's just a simple calculator. Just so that when you see dividend have been announced, you can even decide, if I buy like 1,000 shares, 100,000 shares, and dividend maybe for Safaricom was 0.65, how much would I receive as dividend? Then you compare that with cost of buying Safaricom and see whether it's viable getting it to it. And this, I think, yeah, it's for Kenyan. Is there any other calculator? There is also another dividend reinvestment calculator where you can use this as a Kenyan. Maybe it is a ESCOM. You write the company that you want to, that you receive dividend from. You already have, let's say, 100,000 shares and dividend was 0.65. You want to reinvest this maybe in the next counter. Already we have Stan chart. We can buy one share. That's what we were told. Stan chart. Then target price. That is the price you buy that time when you receive dividend. What price can I buy Stan chart at? Let's say that at that time it will be 200. Then 200. Sorry, it is giving, let's say, a dividend of 50. These are assumptions. You can calculate and it gives you a summary. It's something I've not selected. Let me refresh. Because it's supposed to give you now a summary. So ESCOM, I'm just using these as examples. 100,000, dividend was 0.65. Let me just use an example of 2 bob. Then reinvest in Stan charts. That price, maybe that time it will be 200, and Stan chart will be giving now their dividend at 50. You can do calculation. Don't know why it's not calculating. I need to check, but it's supposed to calculate for you. Give you the dividend that you receive from Safaricom, the net, and how much now you can, and the number of shares maybe you can buy Stan chart and the dividend that you expect. I think it's because I'm sharing this screen, but I will check after this. It's supposed to populate that. So those are the 2 calculators, but I'm also working on other calculators, which I will upload on this blog poster. So I want to make NSE much easier for you to invest based on data and information, because without that, then you are not able to do proper investment. Let me see whether there is any other question. I don't want to leave with a question. I think I've exhausted all the questions. That's my number. I've left the 2 links. And let's meet next Wednesday. This Friday, we have a training for international stocks. So if you are willing to join, be on the lookout for the posters. And thank you so much. Let's meet that time. Maybe on the chat, let me see whether we were together. I'm afraid I didn't see any other. Oh, okay. Thank you. And you're free to reach out on my WhatsApp number. Be free to reach out anytime. If you want to call during the day. And maybe if it is then tonight, not past, maybe 10, because at that time I must sleep. Thank you so much, and let's meet next time. If you're interested, join that WhatsApp channel. I'll share your link by tomorrow. Let me just copy the link again. Let me share it. I'll post all videos there. Asanteni sana. Bye. I'll give you maybe a few minutes as you pick up the details. To WhatsApp channel, the blog, and also my WhatsApp number. I'll give you like 10 minutes, then I'll close the event. Thank you so much. Bye.